Now, for weeks, I've told you to stick with this market throughout the turmoil, because by the time something good happens, it's already too late to swap back in at the lower level. You won't get the lower level. And sure enough, today we got good news in the form of a strong labor report without a lot of wage inflation, a true Goldilocks set of numbers. So in response, the Dow surged 71 points, the S&P soared 1.45%, and the Nasdaq pole vaulted 1.07%. It was a real good day for the bulls. Bye. What's a Goldilocks situation anyway? Well, exactly like the fairy tale. It's where everything just kind of works out right. Now, I don't think that will ultimately be true, but I do think that this labor report that we got this morning makes it more likely that the Federal Reserve will pause and ponder this next meeting, rather than feeling the need to tighten again immediately. Of course, when you throw in a new stimulus package in China, along with the surprisingly easy passage of a debt ceiling deal in Washington, well, maybe you get a grace day, maybe you get a grace week. But like I told you last night, this market has been entirely propped up by the Magnificent Seven, the 7 mega-cap tech stocks that accounted for the entire gain in the S&P 500 through May. That's what tided us over. Now that we put the debt ceiling in the rearview mirror, and the Fed seeing data that allow them to pause the rate hikes, it's easy to imagine a near-perfect scenario where a recession could be taken off the table even as the Fed's done tightening. But remember, we liked the market when it was hated. I am starting to talk more negatively beginning on Monday as this market gets broader, because I don't love a market where everybody's now coming around to our bullish way of thinking, because the market is now broadening away from the Magnificent Seven. I liked it more yesterday than I do today because it's higher, and that's how you have to think. With that in mind, what's coming next week? Well, first, there's an OPEC meeting this weekend. It's called OPEC Plus. Kind of like, like all those different HBO Plus, which is now Max, by the way. Anyway, this meeting could be very interesting, a wild card. They might hurt us with the production cuts to bolster the price of oil. But if so, I will most likely tell you to sell, as I will try to sell some oils for our trust, because I don't want to overstay our welcome in a very difficult group. Much more on that at the CNBC Investing Club meeting at 10:20 Monday.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.